Hey guys, welcome back to another brand new video on Quantum ICT Trader YouTube channel, and today's video is about the ICT Silver Bullet setup for Forex. In this particular video I'm going to break down the strategy and simplify it for all of you, and I can ensure you that you won't need to watch any other ICT Silver Bullet strategy video after watching this one, because I'm going to show you all the formation there could be when you're trading Silver Bullet setup, and I'm going to reveal a secret that would help you to find the finest Silver Bullet setup. So yeah, stick around to the full video, and if you're new to the channel then subscribe to the channel and give a thumbs up. Let's get into it. The first thing first, the time window. What are the time window for Silver Bullet setup for Forex? So it's 3 AM to 4 AM for London session, or could be 5 AM. Then New York session it's 7 AM to 9 AM and 10 AM to 11 AM for London close. The Silver Bullet will form within this 3 time period, but the most good ones form in the New York session. And how much can you expect to get from your Silver Bullet trade? You can expect to get at least 10 to 20 pips for your Silver Bullet trade. The minimum expectation should be 15 pips, not much than 15 pips. And what are the frameworks you should be doing before taking the trade? The first thing you would do is to mark up your draw on liquidity. The draw on liquidity could be the daily highs or lows, weekly highs or lows, session highs or lows, CB or BC, PDRS on discount or premium levels. Now what exactly happens within this time periods? For those who don't know, during this time period we anticipate price to fill an alt imbalance or fair value gap, or it could be the one that's been created inside the time window, and then price would run for the liquidity. So basically this is what happens in the Silver Bullet time window. And the most important thing I remind all of you is that we do not consider it as a Silver Bullet if price go outside of our time window and then taps on fair value gap. We don't take the trade, but we can be in the trade outside of our time window to get our objective. You must enter the trade within your time window, and you don't enter the trade outside of your time window. You must keep this in mind. So let's not waste more time and get into the charts. So here we're on the chart, and you could see I already marked up my draw on liquidity. This highs here as my draw on liquidity. Why? Because price is so close to that buy side liquidity now. And when I mark that liquidity, the next thing I would want to do is to mark some fair value gaps that's outside of my time window and left unfilled. So you could see on this impulse leg there is 2 of them. One is the first one here, and the next one that's not been filled yet. So what can you expect? You can expect price to go down to one of these fair value gaps and then trade the trades targeting that buy side liquidity. Okay, that's how Silver Bullet setup works, and you thought that's what I'm going to tell you. Totally wrong. So see, that's why your Silver Bullet setup doesn't work. You don't understand the narrative and don't wait for the confirmations before taking that trade. You just blindly take trades off of some the fair value gaps, targeting some liquidity. And why am I telling you that? Watch here what happens next. So the very first candle on 3:15 AM. So this is the London session Silver Bullet time window. So the very first candle on 3:15 AM when price came down to this fair value gaps, you were long on this fair value gaps, okay, targeting that fair buy side liquidity. If you are on that trade, you would have been stopped out, okay. And see, after taking your stop, what did price do? Price ran for that buy side liquidity. So if you are on that trade, you put your stop loss here and target it for that buy side. And what did market do? Market took your sell stop and then run for the buy side liquidity. In most of the scenario, this happens in most of the trades. Okay, so this type of scenario happens most of the time with most of the traders. Okay, they take the trades blindly off of some fair value gaps, then target for the buy side liquidity to be tagged or some sell side to be tagged, and that's what you're doing wrong, and nobody's telling you that. Okay, but I'm going to show you how exactly you can avoid this type of scenario and be in the profitable side of the trade. So now, as you can see, USDT took that low on 3:15 AM, and when you see that happens, at that time you would want to go to the correlated pairs, like USDT is correlated with GBPUSDT. So I'm going to now GBPUSDT. I'm going to see what did GBPUSDT did. So when price took that low on USDT at 3:15 AM, what did GBPUSDT do? GBPUSDT failed to take that low on here. So what does it mean? It means GBPUSDT is not willing to go lower, and it's showing the underlying strength on GBPUSDT. So when you see this formation, you want to take the trade on the stronger pair. Okay, on that stronger pair. So I'm going to take the trade on that stronger pair, and which one is stronger here? The GBPUSDT, and there is also buy side liquidity like the EURUSDT. Okay, so I'm going to a lower time frame now. So here I am on a 5-minute time frame on GBPUSDT, and what can we see here? At 3:15 AM, when price took the low on USDT, GBPUSDT failed to took that low. So it means we can take the trade on GBPUSDT and it won't stop us out. Be sure of that, because it's not willing to go lower. So when you enter here, okay, you target for 10-15 pips minimum, or as we had a target here and objectives here, the buy side liquidity, you can also target for that. But when it reaches to 15 pips or a minimum like 10 pips or 15 pips, you want to scale your position out. Okay, so if you are on this trade, what would be the profits for you? If we measure, then you could see off of this fair value gap, it was around a 25 pips moves. Okay, and if we targeted for that buy side, it would have been a 37 pips move on GBPUSDT. Okay, and don't worry about your stop loss. It won't stop you out, because most of the scenario when you have a draw on liquidity like this, or a bias, clean bias like this on this particular day, it was bullish, don't worry about the stop loss being hit on the stronger pair. It won't stop you out. Your stop loss was right down here, and your target was, the final target was the buy side liquidity, and you could see how beautifully price took that buy side here. Okay, so with this formula alone, you can find the finest setup on every pair within your time periods, and I'm going to show you some more example, and I hope you understand the main point here. The main point is to take the trade on the stronger pair, not taking every trade off of your fair value gaps without comparing with the correlated pair. Okay, so yeah, now let's show you some more example. So here is another example of silver bullet setup, and this one is for the New York session 7 AM to 9 AM, and you could see there was a small fair value gap, and at our time window on 7 AM this down close candle tapped into that fair value gap and went lower. Okay, and why would you take that trade on EURUSDT? Why can't you take that trade on GBPUSDT? If you see GBPUSDT, you would see that GBPUSDT made a higher high here, okay, where EURUSDT failed to make that higher high. It means EURUSDT is more weaker than GBPUSDT. So EURUSDT is going to show you a nice move then, because it's weaker than GBPUSDT, and you could see how nicely after creating that fair value gap, price tapped into that fair value gap and then went lower and took that sell side. And how many pips that this move offered you? This move alone offered like 27 pips. That's enough, but you can exit your trade on 15 pips, or if you exited on below that low, it would have been a 20 pips, what meets the criteria for our silver bullet setup. We only look for 10 to 20 pips for our every silver bullet setup. So as you can see, what I told you earlier, you must understand the narrative and wait for confirmation. You should have taken this trade on EURUSDT, because EURUSDT was weaker than the GBPUSDT, okay, and you won't need to worry about that stop loss. You could see price never hit their stop loss before reaching your target here, okay. So yeah, let's show you another example on 10 to 11 AM. So here is the 10 to 11 AM silver bullet example. Here is the time window, 10 to 11 AM. As you can see, there was a SMD diversion between these two correlated pair, EURUSDT and GBPUSDT. While GBPUSDT made a lower low, EURUSDT failed to make that lower low. And what does it mean? It means EURUSDT is stronger than GBPUSDT, and on this particular level, EURUSDT was in a bullish 4-hour breaker, and we are looking for higher prices, so the bias was bullish for us. So yeah, when we see a market structure shift and a fair value gap formed, you could see within our time window. But in GBPUSDT, it created a lower low, where EURUSDT didn't create that lower low, it created a lower high, so it's stronger. And then what we do, so as my analysis, what I explained earlier to all of you, you'd enter the stronger one. So if you would have entered on this trade, you could have easily got over 10 pips. You could see you could have easily got more pips. See, that was a beautiful move. So yeah, I hope you understand the silver bullet setup clearly. You just can't take the silver bullet trade when you see a market structure shift or a fair value gap. You have to understand the narrative and compare the pair with the correlated pair, and that's how it's gonna work most. And you're going to find the finest silver bullet setup if you understand this method clearly. And I would recommend you to practice this over 1 month. If you could do it over 1 month, then it's very good for you, and journal it, okay. So that would be your homework, and I hope you find this particular video useful. And yeah, I hope you won't need to watch any other ICT silver bullet strategy video, because it's simply, I just told you everything about the silver bullet setup, and that's what I use personally. I look for this type of scenario to form, and when I see this type of formation, I enter the trade. That's just simple. I just simply told you the unicorn setup, okay. Until I catch you next time, be safe and stick to your trading rules. See you guys.